Hello. We're going to do a review in this case of the price action from Tuesday, June 4th. Since quite a few people have been asking about this type of price action. So anyway, I couldn't trade today, but I looked briefly from the 5 and 15-minute charts, where everything is developing. And as the review progresses, we'll see in lower time frames how everything happened so well. Higher time frame context from where we were coming from. Then, according to the previous market review, something even weekly from this weekly fractal responsible for breaking this other responsible 50% fractal, which in an hour was a bit of structure, a little clearer, in 15 minutes, even more, but both in daily and weekly, it was that fractal responsible for breaking this one here, and the entire weekly imbalance was filled too, and we got this super good rejection. It even went within a previous low, so everything already looked quite bullish with that certain move, and with that reaction from there. Now we already obtained a structural change in the lower time frame. We had structural changes, and this area had a pullback to its 50% from this origin of structure that's around here. So 50 from here, 50 from here. Pretty random, honestly, in that drop. That was happening. We have the last valid pullback over here. Already being very strict with the theory. I'm one of those who say that I don't like comparing structures like that with such small structures, but let's go with the full theory. We close below the back value. Hence, when we close below this, we have a structural change downward in a smaller time frame. There was a structural change earlier, and it starts to make a pullback here. Valid pullback because this is the bearish candlestick that made this low, and we close above it. Then the continuation happens. No valid pullback. So we have this low until we close above this, and this for the bullish reversal again. So we have this shift area once more. We have a pullback at its 50%. We follow the structure again, just like what happened here. This is going down. It makes a valid pullback and continues the drop. So what happens here is it makes this candle, the drop, and we close above, valid pullback, and we take it out. Continuation of the downtrend from all this movement. So what do we have here? There are no valid pullbacks until the price starts going up here. So we have this high and this low. We close above the high, and we have a structural change again. Pullback, where 50% that we have tab. Double floor continuation, if it's simple from this time frame, right? Now let's see specifically what happened here. And the only thing I managed to see from my cell phone, something early here at the opening, that I saw how it was reacting. And then let's clear this up a bit. that we left in Asia, around here. A close above this, above here, and a close below the lowest point between these two highs. Therefore, change of structure. The highest point between the two lows will be our area of shift of the change of structure. Trap area. An area I usually don't take, especially when there's an entire area unmitigated below those small areas that are being generated. And the price at the open then starts to fall here with this wick. I swipe something around here in this area. This area that validated around here with its 50 and then gave the continuation. So nothing the price swept this intermediate high of this area that was not validated by order flow. Because the price at the moment of leaving it did not come back to give a continuation. So this high is taken and returns to this validated area. And I don't know if it will be the 50 of this as well. Yes, exactly. So the 50 wasn't touched since we left this low. So look at the confluences there. 50 of that swing area that contains this and that intermediate area that the price had validated. Sweeps that. So from there, the opening started to fall. And this was the only thing I saw around here at that time. Well, on the lower time frame, I couldn't be focused nor trade it. But the price got here, touched, got to the origin. This, it's 30% from there. It swept with the responsible fractal. Let's see where it did flip with candle pattern. If we look at candle pattern, here's the low that makes this high. Then that low is taken back. Retracement to the flip area. And then with that, it went down here. We already see a bit in seconds. Let's see it like this all for a minute first. And it went to sweep this low that hadn't even managed to touch the 50s. Well, one or two ticks. So here now begins one of the patterns that I share in the sweep executions. Fractal goes up, makes the low, then takes it out. So what would this be? The flip, right? We're going to remove this moment. So there's the flip pattern, candle pattern. It goes to the price. There was news today. I don't remember what it was about, but there was news. I imagine it was this movement. Look how it hits the high. It makes a quick pullback. Let me check if it was some responsible entity or simply something in the range. This entire range is 30%. It made that quick pullback after the news. The target wasn't met, so it came back and fulfilled 50% of that range from where the structure change happened in Asia. And from there, the market began to... This part right here, from where? From then. It's the top 50. And the 50 we see here, the change in 15 minutes. So look at how, in the lower time frame, the price made something within areas of its equivalence. Of low temporality also made a double floor, made its continuation, Target achieved. Ready. And now it reached an origin, led to that structural change, and now it's time for the high temporality to build its stages. High temporality takes longer to build it. It's not like the price reaches the high temporality area and immediately moves away. We always get some consolidation. The setup forms, and then we go. Let's talk strictly from a chart perspective right now. At the end, we'll talk again and remember a bit about how to have an expectation for this type of market profile. So, well, you see the back and forth ping pong, quite nice. Now, here where the candle pattern formed, where is the origin of that area we took? We discover things as we review them, and that is in confluence with the 50% of the entire 15-minute area, 70% of this. So, as a result of that, again, like it happened here, it gives us a candle pattern low that takes out this low, does a small pullback, a high that sets this low, the high is taken out, and then it leaves this candle pattern giving 30%, makes a continuation, and the function compliance begins if the rejection of that takes the load off, and if it doesn't, it's because the order flow is quite bullish. It failed to fulfill its function, and instead we distributed it upwards from the candle pattern. After touching this, well, here we have a candle pattern. Again, then we got to the origin, where there was also a candle pattern around here. A high, a low, a high, the low is taken out. Covers its 50% responsible. Brings the price down to the previous area. This previous area with its responsible here. From there, it comes to finish mitigating, leaves a double top, makes a candle pattern up here again, makes a pullback, which leaves a low, comes here, takes out the low. Pull back to its 30%, continuation, takes out this low, then pull back to sweeper, the first tap at 50%, the strong move flip then, without mitigating, and then the price comes, so we discussed in market profiles. From origin to origin, I don't want to deal with responsibles. How so? If here the price takes out this low with body and leaves me a responsible, I do not want to start going short from there again. And look how that's Insta stores, because I identified that the price is within an origin fighting with an opposing order flow, and that the price is sweeping here and here and here and here. So I identified that I want to wait from origin to origin. So, well, the price comes. Now, yes, again to at least here from an unmitigated origin. A flip, unmitigated, came to mitigate, it went here. So an unmitigated origin. So we had already mitigated here. After the sweep, the price came, made a small movement. I say, well, small, actually 20 something points is pretty decent for a trader, even though it wasn't a movement that gave a continuation. Look, that even though we are in a range, it is always a good amount of points. And why is that? Because the price has spoiled us from past days, moving 300 points, 400 points in no time. And that makes people lose perception of the space in which the price starts to move in the following days. Preserve. those movements thinking that the price is going to repeat everything exactly as it did, and it doesn't work that way. So it's mitigated now. This flip, then it sweeps this, leaves a new flip. That flip was mitigated. This continuation happened, then it leaves this and comes and sweeps over here. This first tap to that entire area, which continues, then there's the double bottom. 30%. A boss even gave a flip here, upwards. Flip, which led to what? This was responsible for breaking this, and with that, it created the double bottom. So it sweeps again, and history repeats itself. Flip. And now it's coming this way to the other origin. It didn't touch it completely, to be honest. Now it has simply reached the level of this change. It reached that change of internal structure. It reached its 70%. And now with that, the price comes this way. Well, then the double bottom tab failed. In this case, to make the distribution when it was finally around here. Failed to break this high, and in the price, and takes that to mitigate what was previously left unmitigated from this by a tick again. Similar to what we saw in this area. The 50 of that flip. If I wait for several sweeps, and I'm not the first to jump in as soon as the price gets there, I'll have a much better chance for the trade to work for me. And in the execution part, with whom I saw that execution session, where I was saying how the price started to consolidate after making a sweep. So adding that up in seconds, they found pretty good entries. So alright, this gets swept, consolidates. Even in a minute, it gave the flip pattern over here, retracement. It comes and takes out that low, and from there it takes out the high. Immediately then, it retraced to the flip area and went off immediately. We now have this one responsible here. If it had taken out this low and closed with a body and swept this, leaving that bullish candle, that last bullish move, responsible for breaking that, and it starts ping-ponging there until it hits its 50, sweeps, and then the same thing again, flip. The price moves around here, goes back to the flip area even. It then becomes clearer that it must have been a structural change, perhaps of a shorter duration, if this rejection wasn't very swift and ends up taking out this low, now creating what could be a double bottom from that flip. The price reaches the previous area, tries to create distribution twice from this area, and doesn't succeed. So again, the rejection here doesn't fulfill its function here, which leads to a sweep and a rejection. And it doesn't fulfill its function. I assume we're quite bullish at the moment, since we took out that area, and the double top doesn't fulfill its function, which leaves us responsible for constructing that bullish order flow by taking out this high and removing the bearish flip that had formed. Look how if someone swallows a stop loss here and waits for the narrative, the price gives them an opportunity in favor of that narrative. Now this moment begins an upward trend. I see that the pattern has already formed in the higher time frame. I start to get an idea that it is about to distribute that and more in these types of situations, that I know those who have traded ICT. They know that when there is a distribution in London and it consolidates all morning, the price usually makes the move. Everyone was waiting to take in the morning, just in the afternoon. So just as it happened today, well, here it sweeps this internal high. It reaches again the origin where there is one of the here. It sweeps that. And a pullback here created a nice area that would have been good if the price had reached its 50. In this case, it didn't. It simply respected the area responsible for taking out this high. And look here again at this. Look at how the price swept and rejected. And instead of coming back down with that rejection to make a pullback, it kept going up. So it is kind of an indication that this is quite bullish. But well, that responsible move was that one and only last counter move before breaking here, which you can see was quite linear. So that last area of supply and demand that was generated so well. Let's see what else we observe around here. Over here, there might have been a flip. So the price from here reached that point and started to pull back, and again, this range. But what am I observing then? That the hikes are being broken, that this is going like this, going like this, like this, like this. It's the typical thing that would look like liquidity in another system. But here we are building a bullish order flow as a result of our system. See how it just finishes a certain internal bearish flip and then comes and takes out the high again. Once more, it's fulfilling its function. The bullish moves are making the pullbacks to the areas and starting to go. And here, it was already quite a linear move. And once this area of structure change in the morning finally broke, it reached this origin here, and from there, the pullback occurred in the afternoon. A pullback that Danny brought us. If we continue taking the areas as we were taking them now, we have a larger area. We have all this area from this low to this high. We have 30% of it as the responsible one, right? We have that responsible one that is very clear there in 15 minutes without as much noise as it would be in 1 minute. We have that area there. I can take the entire area that contains it too and refine a bit where the structure changes again. Not in 1 minute. Now, once I've identified the longer temporal trend and the person responsible, here is the structural change in 1 minute that I have. Covering the person responsible, the longer temporal trend covers 30% of the structural change. The market has already become quite tendential because the area that was blocking us due to order flow has already broken. The market closes, and when it opens directly here to continue the distribution that was being generated. To get to where now? To this east, where the shift must have been in 1 minute, which had reached its 30% perfectly to continue. Area validated by order flow. Second touch here. So look how touch the 30 multiple times and remained unmitigated at 50. Then it reaches around here to 50, closes above this high, closes below the low. We are left with a structural change. First touch, downward movement, reaches the origin. Origin that was left unmitigated where the flip occurred. This origin gave its double touch, upward movement, double touch, flip again. Takes this high, takes low. Structural change. Pull back to 50%, goodbye. Where to? To the entire area that was left behind. And mitigate. Then beautiful. Beautiful this... Well, I saw this from a minute in reality. Since in seconds, it's super extensive everything. But all the patterns of the... We marked in a minute were then structures in 5 seconds. And the idea is to work it. Like this market profile with rejections. After the rejection, some kind of flip or break of a responsible. And from there, I can go. Then look here, even both in 1 minute and in 5 seconds. Rejected broke the responsible. And as soon as it broke, the responsible ended. To go this way, I said it went back even to the shift area, gave a reaction, but that only went back to the one responsible here. Due to the order flow of the cyst, then against the order flow, against the trend, just trading the reactions, and still they were good reactions. Look, they were more than 10 points. The price actually was moving quite a few points. Just that, as I said, we were used to seeing much more in previous days. So as a teaching and lesson, for those who still find this type of market profile difficult, obviously while learning, the idea is to reduce risk. If I identify that I am in these types of markets and I've already had a stop loss, I must reduce the risk. If it isn't my best scenario for trading, it's better to avoid letting losses affect us, and on a bad day that can be avoided, to not throw away much progress. Also, in the week, in spirit, we have Friday, and one might expect before news that a certain range, some consolidation, certain pullbacks occur to reposition oneself before the news arrives. Also, we came from days of heavy distribution, and now there was a structural change. Now everything is starting to change that order flow to bullish. So don't expect the market to be doing the same thing every day. So all these days during the New York session, we had very strong movements, and then the distribution downwards. And even on Monday of this week, it also reaches a point where one says the market has to be ranging at some moment, just like when it ranges a lot, as it did in that scenario back there at some point when it was before some news, if I'm not mistaken. Let's see if I remember. It was before some news and the earnings came in. I don't know if it will be mentioned here. The market had been doing this for several days. It was going like this, like this, like this, like this, like this, until there was some report here. I think it's the other data that's similar to the inflation one, if I'm not mistaken. I'm not sure if it was the earnings report or maybe something else, but it's been building up. When the report finally comes out, you realize the market's been so repetitive that you think, this can't be that predictable. It won't keep going up forever. I have to expect something different at some point. So in this scenario, it was the same. And the moment I identify that you start to struggle between two zones, and that the New York opening does not give me a clear distribution, when I see the New York opening like this, and then they try the distribution, and then comes and takes out the high of what seemed to be here, for example, a bearish narrative from this, well, it hadn't touched this yet, but the valid area that we saw at the beginning of the review fails to do that, and starts from another area to do this and takes out the high. And again this, at this point, I should at least say, well, this is in a range. I change my mindset. I start looking for another type of confirmation, because when Nasdaq really wants to distribute, it manipulates quickly at the open and distributes. It goes and touches something quickly at the open and distributes. But today was quite different then. Let's grab that ability to adapt and read what the market is telling us. I'll stop here. If you have any specific doubt or on any point I missed, let me know. I tried to be as linear as possible in a minute. In 5 seconds, it feels like an entire eternity to do this. So any specific trade that you had, send it to me on Discord and I'll get back to you individually. Bye bye.